Pat Carroll. I'm Senior Portfolio Manager with World Equity Group San Francisco. And today I'd like to share with you what is relative strength. This is my area of specialty and something that I use to help manage portfolios for clients. Relative strength is nothing more than a mathematical calculation comparing securities to each other. For example, you can compare the price performance of the Standard & Poor's 500 index to a major index of international stocks. You can compare the S&P 500 against a bond index, a fixed income index. You can compare an individual stock against the S&P 500. What we're looking to find is where is the price performance. It's like comparing two baseball players to each other. In real life, if you have a business and you need to find 10 salespeople to sell your product or service, what you're naturally going to do is go through a selection process and find your 10 best candidates. But we know that in reality, maybe after the first year, 2 or 3 of those performers are going to be better than you'd expected. A handful are going to be hopefully as expected, a little bit better, a little bit worse, but not a lot. And then a handful, 2 or 3, are going to be, let's be honest, abject failures. In your portfolio or in your business, what you want to do is get rid of those abject failures and have a way to figure that out before it really causes a problem. You then want to give more of your resources to your top performance, because we know that in history, top performers tend to stay that way for some period of time, whether it's a baseball player, a business, an artist. The best continue on. It's how they're driven, and eventually they will need to retire, but we'll be able to measure that. So what we're trying to do with relative strength is to identify top performers that exhibit a consistent performance record. And we measure that mathematically, and then we look at it in a chart. We call this technical analysis. So what I'd like to do now is share with you a couple of charts where I will show you what relative strength looks like. So let's start by looking at a chart for the last year. This is a graphical view of the price performance between Danaher and the S&P 500. Here we see Danaher, the price performance line in blue, up 16.5% in the last 12 months, while the S&P 500, the orange line, is up 1.19. I venture to say that most people would think that's pretty good outperformance. So that's the last 12 months. Next, let's look at a point and figure chart for Danaher's relative strength against the S&P 500 going back to the early 1990s. And where we've circled, that was May of 1993 when Danaher broke out and gave us a strong buy signal that it has not relinquished since. So for 23 years, Danaher has had a consistent relative strength ranking against the S&P 500. Lastly, we'll just quickly look at Danaher's trend chart, where we can see that at $98, it'll hit a new all-time high, and in the last 12 months, in the last 4 years, is up almost 100% in value. So this is what we do when we look for securities for portfolios, whether they be indexes, mutual funds, or individual stocks. We want to hold our relative strength winners and cut short the relative strength laggards. Thanks for listening. Have a great day.